Hey everybody, and welcome to Project Premium Harvest. My name is Matt. In today's video, we're going to be going over the options calls I have ran for April 14th, 2025. I ran a couple of them for SPY and for Oracle. We're going to talk about how much money I made. We're going to discuss why I selected specific call options, what the end goal is, and then we're going to discuss my portfolio and the Great Reset. The Great Reset has happened, and I am going to explain why the reset had to happen. So let's get going. The first thing I like to show on my channel is my account overview, and currently it is valued at $88,909.60. Now let's get into the Great Reset. The Great Reset is basically me losing faith into high income ETFs, not necessarily losing 100% faith, but I wanted to lower the percentage of my account invested in these funds. So what did I do? I sold out of gpix, jepq, right? Completely sold out because I decided I could actually make more options premium just buying 100 shares of SPY and running daily covered calls against it. No NAV erosion. And on top of that, I would make a significantly more amount of premium than just holding those shares. The other funds I got rid of, xdte, I'm currently still invested in xdte, but I brought my percentage of the portfolio down. I currently sold out of about $46,000 of xdte. So right now I only have about a $5,500 position. I think that's 135 shares. I greatly reduced my position in amzp. I sold out about $35,000 of amzp. Same concept. I am cleaning the slate with NAV erosion. When I ran the numbers, it makes more sense for me to own 100 shares of SPY and run daily covered calls, and I will make more premium than these covered call funds by Kurv, Roundhill, and yieldmax, and it's going to be significantly safer. Also lowered my portfolio percentage in goop. So right now, as you guys can see, I'm only invested into 5 different holdings: xdte about $5,000, amzp $5,000, goop $5,000, SPY I only have about $106,000 invested. And then my Oracle shares, which were an RSU grant from my previous employer. And that's valued at, $32,000. That was a lot of me talking right there. But end of the day, let's look at the numbers and see why this strategy makes sense. So now let's go over to the spreadsheet and we'll talk about all the different options I ran today. All right, guys, let's kick off the options I ran for April 14th. The first fund we're going to look at is Oracle. I have 235 shares, but to run covered calls, one contract is 100 shares. So I could only run 2 contracts worth of Oracle. If I buy 65 more shares of Oracle, then I could run 3 contracts, but I would rather just spend my money and take it to the SPY so I can run dailies. Oracle, I could only run weekly covered calls. So let's dive into the details. So the call that I picked for Oracle is I chose a 142 strike price. Oracle at the time was trading at about $135 a share. I chose a price where the stock is going to appreciate about $7 a share. And then I locked in about $30 of premium per contract. So I made about $60 off of this covered call. The intent of me choosing the 142 strike price for Oracle is I am choosing a number that I don't think is actually going to hit. So I'm a little bit less aggressive when it comes to my Oracle shares because I want them to appreciate and I want to hold them over the long term. So I'm willing to take a little bit less premium. If my shares do get assigned, the strike price is met, then I'll be able to sell it at a very competitive rate. And then with that money, I'll either throw it into SPY or I'll buy the Oracle shares and wait for it to dip again. So that's kind of the thought process of my Oracle shares. With my SPY investment, I have a completely different thought process. Not necessarily completely different, but I'm a little bit more aggressive with I'm okay with some of my shares being assigned so I can get that fine balance between appreciation of the underlying and then like the amount of premium I'm going to collect. So let's dive into it. So the first covered call I ran was the 548 strike price. At the time when the stock market opened today, SPY was trading at $540 a share. And then I chose something that was far out of the money. So basically, if I sold out of this fund, I would have made $800 of appreciation and then also lock in that $142 of premium. But at the end of the day, my shares didn't get anywhere near that 548 price. So basically, the call expired worthless. I got the premium and then I can rinse and repeat for tomorrow. And then for my second set of 100 shares of SPY, about 200 shares, I actually bought SPY shares this morning at about, $40 a share. So it definitely was a little bit pricey, but end of the day, I plan on running options against this. And I think this is still a decent buy-in price. Do I wish they were still at the $4.95? Yes, but I'm going to take what I can get. So I bought 100 shares. And then with that second set of 100 shares, I made $162 of premium. I chose a strike price that was $5 away. So it was a little bit more aggressive. So if the fund appreciated up to that $545 mark, and then at the end of the trading day, it was $545, I would have got assigned for a $500 profit, but then I also locked in $162 of premium. But same thing with the $548 strike price. I didn't get near the assignment, could just locked in this premium, and then I got to keep both 200 sets of shares, and I get to rinse and repeat tomorrow. So I'm going to do the exact same thing tomorrow. And from just trading today between the Oracle and the SPY, I made $363.92 in one day. I had $60,000 of xdte, and that's what it would pay for the week. And I made that in one single day. And on top of that, this premium wasn't pulled out of the share price to pay me back. So that's one of the reasons why I chose to sell out of a majority of my xdte, because I think that running covered calls against SPY is a lot more effective mechanism than owning high income ETFs. I'm not 100% pulled out of the high income ETFs. I still like the idea of like somebody else running some options for you, but just a smaller percentage. And same concept, like I had gpix and jepq. This one payment, one day of running a daily covered call on SPY is 1 month of gpix and jepq premium. I did that in one day. So now imagine there's somewhere between 20 and 25 trading days in a month. So that's the thought process. I just wanted to run a quick down and dirty of what I did today. I'll probably be making these videos on a day-to-day basis. Let me know what you think in the comment section, if I should do these daily or if I should lump this all together at the end of the week for my weekly overviews. But yeah, guys, that wraps up the video. Short and sweet and to the point. Hope you're all doing well out there. Hopefully this gives you an idea to maybe kind of reprioritize, reorganize your portfolio looks like. I was just tired of NAV erosion, and I definitely think with this mechanism, it is a better way of making money. There is a downside to the covered call strategy. It is that, say, for example, I bought these shares at 540 and then the stock market and SPY goes down to $500 a share. So basically would lose $40 of share price, but that's not the worst part. It's just that I'm not going to pick a strike price where I'm going to sell at a loss. So I'm basically going to be running premium that is way out of the money, and the premium is going to be really low. You would have to gut bad premiums or low premiums for the amount of time for the share price to recover back to your initial investment. Because if you're trading at money or above, everything's great. But once the share price goes below it, then you kind of have to fight for the amount of premium you're going to get. And that's why I'm not using 100% of my margin right now. I don't know what the market's going to look like. We do have a temporary pause for these tariffs. It seems like negotiations are going relatively well, but I have enough money to buy another 200 more shares. So basically see this 300 and this $300, I could double that. So I could potentially be making $600 a day running covered calls. However, I don't know what the market's going to look like. I'm going to be patient, my money, and if it goes down below 500, I'll probably buy back in again for my third 100 shares. And then I'm also debating the idea that maybe I should keep about 100 shares on reserve for when the 90-day pause and tariff elapses, so that I can have more capital available to make potentially more plays if the market continues to tank, and so I could potentially get a better discount. So those are just the thoughts, kind of long-term, short-term planning. But yeah, hopefully that gives some ideas for you guys to better your portfolios. Matt out, and I will see you in the next one.